If you are a beginner trader, in today's video, I will be showing you how simple and easy it is to make $1,000 a week. Yes, extra, whether you're working part-time or full-time, you can do it trading simply the Emini futures. Now, you can also do it trading the micro futures, maybe a little bit tougher because the tick value size are a little bit lower or is lower than the full-on Emini futures. So if you trade the NASDAQ, the ES, the Dow, even the Russell, it is definitely possible to trade and make that $1,000 extra, all right, at the end of the week for, money that you can put away into savings or have, money for spending for whatever it is you need it for, okay? So let's talk about it real quick. But before we actually jump into it, I took a trade, actually two trades into the overnight session yesterday evening, okay? Now, I typically don't trade the Asian session. I definitely don't trade the London session because I don't get up that early in the morning. But I saw opportunity, and if you are an elite channel supporter, I will be breaking that trade down today, covering both of them were long entries, all right? So I'll be covering those trades for those individuals. And if you're interested in becoming an elite channel supporter, the link is down in the description portion of the video. There's two links. The first one is the Discord. Second one is the link to become a member. All right, it's only $6.99. I'll go over more of that towards the end because it is a very, I should say, valuable membership program that's part of through the YouTube tier membership program that allows you to gain access to video content that's not made public here on this channel. So, and it helps, trust me, because there are plenty of people who are part of the program that have found their way to becoming, successful and profitable consistently month in, month out. Okay. But outside of that, let's go ahead and touch base on this video topic today about how to go about making your first or continuously making $1,000 a week trading the E-mini futures. All right, so if we look at structure for today, all right, what do we see? We can definitely see from yesterday the market was making lower lows and lower highs, right? And then we started breaking back to the upside, all right? Then we had a dip going back into today's trading session or overnight where we broke this area coming down right below this area here, came down, pulled back, and broke structure again. So at that point, we went from bullish back to bearish. So we're actually in a wedge right now, kind of moving sideways, so be careful on how you trade. But if I was to be trading right now, looking at the market, being that we actually broke structure here to the downside, coming down, all right, and then we broke it back to the upside, a little bit probably more so bullish right now, even though we did have this little dip coming back right here because we are breaking structure again. Like I said, man, it had a push up, high, higher, low. Okay, broke structure here, pull back. We did break below the structure here, but we are forming a lower high right now. Okay, so we haven't broke this area of structure coming lower. That's kind of that reversal pattern that we like to see, where we're seeing left shoulder, a right shoulder formation, where there's a head and the market breaking structure here and structure here coming to the downside. So we are actually in a wedge right now for anyone that can't see, trading it off the higher base chart. But there was opportunity to still take trades today. I traded today. This is an entry that I took going long for a quick scalp. This is one of the entries I took. I actually took two today, guys. The second one I didn't hit the recorder to post it quick enough. But anyways, this is the trade I took. It was 13 points here. I had a good day trading today. You just really need to pay close attention to those higher base zones. For example, like there's one down here. It didn't tap it yet, right? Everybody probably had their eye watching out on it. It's also around a confluence round number sitting there at 700. So that's the name of the game, really, is to mark up a higher base zone and then move down to a lower base zone. And the reason why is because that gives you more confluence. So you may be saying, well, what do you mean, Mike, when you talk about, having a higher base zone and then finding a lower base zone? So I like to start off by identifying the structure of the market and whether it's moving lower or higher. If we're moving higher, then we're making higher highs and higher lows to the upside. All right, it's all part of the strategy and going about scalping, the E-mini futures. Okay, so what I like to do again is to figure out structure. Okay. If we're bullish to the upside, I'll be looking for long pullbacks to a key area of high probability demand area, like right here, this overnight right here. I waited for this. I saw this yesterday. I thought it may come back into the session, but it didn't. It didn't do it until Asian session last night, but it pulled back right here. This is a beautiful area of demand where the market was breaking structure higher. Okay, so this is an area of demand. The market pulled back to it, and this is what I'm going to talk about To anyone who's an elite channel supporter, I will be breaking that trade down so you guys can, grasp an understanding about those type setups. And that's the reason why I do that, is because I want people to understand, my mindset of why I took those trades, breaking things down. It's basically that, the meat and potatoes to the whole strategy as a whole, because I break the strategy down on these setups in detail, talking about stop loss placement, profit target areas, as well as structure, to let you know why I took that trade, so you can take similar setups just like that. You can find them on your own. But again, you also get other things, which I'll talk about towards the end. So let's jump into it as well. What I'm looking for is where the market was pushing higher today, right? We have the market pushed up, pulled back, made its high, higher low, broke structure here, but it also broke over here, right? But there's an area of demand here, but I like to see my demand zones resting on the inside of a swing. This area here is not, but it's still considered to be a demand zone. So I knew this was a demand zone, but there wasn't really a breaker structure with it, okay? So I like to have a breaker structure pushing up and then a demand zone resting on the inside, and in reverse of or flip it if it's a supply zone, okay? Like this is a actual supply zone resting right here because it came down and it broke structure. That's why the market came back up here and it's reacting off of this area, even though it's a low probability zone. When I discuss low probability versus high probability, I'm just really stating that, is there an imbalance? Okay, resting back at the zone, or what is classified as the gap, back at the zone. If there is, and it's a high probability setup, like this is not one, because this candle here broke below this bullish candle right here, and when it closed below it, the next candle came back and closed the gap back up to the bottom end of this bullish candle, okay? So that marks it to be low probability zone. I mean, even though higher base charts, they can react a few times. You just have to be very careful when you move down to your lower base chart to look for a setup. But when I was looking for an opportunity to go long where it broke this area structure in this one here, it came back. I'm going to move down to the lower base chart and show you right quick, because this is a zone here, right here, that it tapped into on a pullback right here. We're bullish, okay, on the higher base chart. So I was looking for an opportunity to scalp going long. But this was an area right here where you could have went long off of here, high probability demand area right here, to take it to go back long. So, and if you missed that opportunity, it gave you a second chance because it came down and it broke below, swiped below these little lows here, grabbing liquidity right at that point. Turn back around, and then you can, go long off the candle closure, meaning the break and close of a candle going back long to the upside. So that's why I took that trade today, going long. But what I want to really show you, the strategy and how you can actually go about making, again, like I said, $1,000 a week. Simply doing this is roughly like $250 a day. So again, we're going to mark off a higher base chart first, but we got to understand and get the direction correct, right? So if you look at the chart here, this is on the 6th, I believe, the 3rd going into, is this the 3rd or the 4th? Give me 1 second. It's the 3rd. The 3rd of February, okay? So the market was making these higher highs and higher lows. You can see it breaking structure to the upside, right? Well, it broke structure to the upside right here, okay? So when it pulled back, it left behind this area of demand right here. As you can see, this is an area of demand, aggressive buying, breaking structure, pulling back, okay? And when it pulls back to this area, again, it's a high probability setup because there's an imbalance of gap resting back at to it. So once you've identified the structure break and we are in the direction of being in, bullish momentum to the upside, where it's making higher highs and higher lows, go ahead and mark off the zone. Mark off your demand zone if it's high probability. Once you've marked it off, after you got the structure break, mark the zone off, right? Wait for it to come back to the zone. And while it's doing that, then just switch down to your lower base time frame chart. Okay, for me, I trade range-based charts, so I'm marking my first zone up on the 120 right here, and then the second zone I mark up on the 24 range. All right, okay. So this is the area where we're talking about. Okay, well, it's broke structure here. We've marked up the demand zone. We're in this area here as it's retracing back, which is on the lower base chart. This area here, we're tracing back. We're looking for the market to tap into the 120 range zone to start with, okay? It almost does it right here, but it doesn't. It comes down, it taps into the zone finally. When it does, we're looking to see where is there an imbalance at, okay? An imbalance at resting on the inside, and there's one right here where it taps in here, but you gotta be careful because you have multiple ones. You have one down here and one up here as well, but I would definitely be interested in the latter one, and there's a imbalance or gap, back at the zone down here at the latter portion. of this push up, pull back, and swing where it's breaking structure here. So as you can see, the market pushed right through this zone right here, and then without giving the break and close of the candle above, you know, like I talk about in videos, it comes down here, it tests the zone, and then it reacts off of it. So this is the zone right here. If we look at this, because we have a imbalance, a small gap attached to the actual zone, all right, on the lower base 24 range chart. So we mark up the higher base 121st demand zone, and then look for a clean demand zone to where we can take an entry from on the inside of the larger zone. So basically it's a two-part zone. First zone 120, second zone 24 range. We look for reaction, get the break and close of the candle to go long, okay? And when you get it, you go long, okay? Simply put, aims for areas to fill are going to be gaps to fill back to the upside, possibly some area of liquidity. But it's pretty self-explanatory. It's not a lot, you know, that you really need to put into as far as thought, other than paying attention to structure, understanding which way to trade. Try not to counter trend trade against the actual higher base chart. So if we're bullish on the whatever the higher base chart you use, try not to counter trend trade against the grain, meaning bullish, look for demand setups on both charts, okay? All right. Bearish, look for supply setups on both charts. It's simple as that. So again, all we're doing is identifying the market direction, okay? Find a high probability demand zone where the market broke structure at, okay? Mark it up, move down to your lower base chart, wait for it to hit or retrace back to the lower base zone, the higher base zone as it does here, okay? Then start looking on the inside where there's some solid demand zones with aggressive buying, whether it's imbalance or gap resting back at the zone. Once it taps it, you get the rejection, the break and close of the candle above, go long, simply put, okay? And that's in reverse of if we're looking to go short. Again, this is a simple strategy in which you can use, you know, not weekend, but, you know, day to day, week to week. If you're looking to, you know, try to make a solid $1,000 extra a week, that's only $250 a day, and you can scalp that very easy on the NASDAQ because the NASDAQ gives you plenty of opportunities. Or maybe you trade the ES. But either way, I mean, I trade both markets. I haven't traded over on the S&P 500 futures lately. Been looking at the ES and looking at gold, but yeah, I mean, it's definitely doable for anyone out there who's interested in making a little bit of side money or some pocket change, right? Now, in talking about, you know, the Elite Channel supporter membership program, for anyone that's interested, again, what you receive with that is the trade breakdowns. There are tons of those videos already posted to that private community. You also receive the video playlist as well as a great video that I cover surrounding market structure for anyone that's interested in who's struggling with that concept. I break down market structure so you can understand, you know, what it looks like in reference to the market making, you know, bullish runs and then reversing, looking for, and then it switches from bullish to bearish, back to bearish to bullish. So you have to be able to see that to understand the direction in which to actually trade. The trade breakdown videos is where I break down the trades that I post over on our Discord community. Again, the Discord is free if you're interested in joining. It's the first link down below in the description portion of the video. But outside of that, you know, it's only $6.99 a month. That's all it is, $6.99 to become an Elite Channel supporter. For anyone that's interested, what you're doing is just support my efforts as not only a trader, but as a content creator as well, supplying valuable, knowledgeable information that could be game-changing to you. You know, not everyone's going to see it the same way I do, but we have successful traders that are part of the community, some that have, you know, that are still with us, some that have gone. I don't expect everyone to stay around forever. You know, once you've picked up and learned what you need to learn, move on. You know, that's a great thing about it. But, you know, it would be nice to keep everybody still within the community. But we still have some good traders, some people that are still, you know, that are beginners, that are finding their way through. They're on the journey or path just as well. So don't feel discouraged regardless of what level you're on, I should say right now, as far as on your journey. If you're a beginner and you're just starting off and you are researching information, there's plenty of valuable information that I share on the videos. The strategy is self-explanatory. I break it down just about in every video because I know we have newcomers that are coming every single day to the channel. So that's why I talk about, you know, and break things down just to show you how simple it is. All we're doing is using and looking for multi-chart confluence again. Okay. So again, Discord down below, as well as the Elite link to become an elite channel supporter. But that's all I have, guys. Really, that's all I have. And if you're interested in joining, then you can click on it. But make sure you choose the second tier. Once you click that link, the tier for $6.99, because that's going to give you access to all the additional video content. Okay. Outside of that, that's all I have. I appreciate everyone tuning in and watching the videos as you always do. If you're not a current subscriber, please take the time to go ahead and sub by clicking that subscribe button down below. Make sure to turn your post notifications on. That's simply clicking the bell. Once you click the subscribe button, click that so you never miss one of the uploads. Outside of that, if you found value in today's video, do me the biggest favor and drop a like. Click that thumbs up button for me. I definitely greatly appreciate it. I'll see everyone in the next trading video. And again, if you are an elite channel supporter already, I will be breaking down the trades that I took overnight on the Asian session, those longs, so you can understand and grasp those just as well and look for opportunities just like that. Take care. See everyone in the next one.